Good morning. This is Larry McMillan with the stock market update on Tuesday, December 27th. So I hope you had a good holiday weekend. The market is not having a great start to the post-holiday week, even though we are in the seasonally bullish Santa Claus rally period. So that lasts, it began on Friday, and we had an update then. And it lasts through next Wednesday, the second trading day of the new year. Typically, the market rises a little more than 1% during that period, and so we are trading that for looking at the history of it. However, if that period should produce a negative result on SPX, that's usually a pretty negative sign going forward, at least for the short term into January. Meanwhile, S&P has shown their support in the 3750 to 3800 area. Bottomed there several times last week, touching the -3 standard deviation Bollinger Bands while it was doing that. And overhead, there's pretty strong resistance in the 3900 to 3940 area. So a tight range. And I don't know if we can break out of that in a holiday trading mode, but we'll see. Meanwhile, the equity-only put-call ratios remain on sell signals, and that's confirmed by the computer analysis. The breadth has improved a little bit, and we did get a buy signal on the New York Stock Exchange breadth oscillator. That's happened a couple of times. However, an isolated day or two with here and there with a buy signal from the New York without a buy signal from the stocks only is relatively meaningless. For this to really generate a buy signal, we would have to see breadth improve more from here. New highs on the New York Stock Exchange continue to register a low number, so the new highs versus new lows indicator is also on a sell signal. But that brings us to VIX, which is, looking at the world through rose-colored glasses. And so VIX has a buy signal in terms of the spike peak that was registered in mid-December, as well as the trend of VIX, which is aiming lower. Now, VIX is up today, but that's just kind of a reaction after a 3-day weekend, and we'll see, if these buy signals persist. But VIX would have to rise above 26 to cancel out these buy signals, so that's not an easy task from where it is right now, near 22. Finally, the construct of volatility derivatives, which is the term structure of the VIX futures and the CBOE volatility indices, that's all positive for stocks as well. So we have a sort of a mixed picture. We have a positive trend from VIX and the seasonality, but we have a negative S&P chart, and we have negative equity-only put-call ratios, and somewhat negative breadth as well. So we are maintaining a core bearish position, and we'll trade other confirmed signals around that. I ask you to visit our website. We are running some specials this week, so you can get some pretty good discounts on our products, especially the daily products, which can help you keep up to date with these indicators on a short-term basis. So have a great week trading, and enjoy the next holiday weekend coming right up.